All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Interesting day here in the market. We saw this morning where we saw the market dip on the ISM data, and had this really nice hard snapback, bled a little, and then had that kind of secondary high volume snapback, and retested the ISM levels and has carried on higher here the rest of the day. And so we're looking from the lows here. We're talking about a market that's about 55 points off of its lows. And that's a pretty sizable reversal, a 2% reversal. If I put it on a 1-hour chart, this is what it looks like, right? With this nice kind of big tail underneath here. And something that, does definitely bring, bottom pickers to kind of look and go, all right, this is curious, all right? And we'll go talk about it here in just a moment, but let's start off with the challenge. We have a couple crossovers out there in the market, but nothing signaling for the challenge. We have a downside crossover here on Apple, but nowhere close to signaling a bearish trade here. This is one of those rare situations where the stock can go up and yet still have the 3 and the 7-day or the 3-day moving average cross down below the 7-day. We don't see that very often, but just simply has to do with the last this day right here. What was that? Monday getting locked off the 3-day moving average. So that's all there. No upside signal with that, downside signal with that. We have a Pepsi which had an upside crossover on its earnings here. No signal there, and then a GLD which I mentioned this morning has the upside 3-7 crossover, but is not a signal. Consolidation risk on that is fairly high here for the GLD. So nothing to go out and get into right here. But when we go and we look across the board at the market, there's some very interesting candle setups, right? Let's just go to Intel, for instance. And, here's Intel. It's up about 60 cents here today. Nice reversal on it, right? If we come into something like a IBM, right, nice little reversal on this here today. And in fact, if we put on the Bollinger Bands, a lot of these reversals happening in the lower Bollinger Band. You know me, these are some of my favorite places to buy stocks, on dips. And I will be very hard pressed not to get into, one or two of these that are out there here today. But they're across, they're all over the place. They're everywhere. We do see stuff like Bank of America, even, on this lower Bollinger Band has that reversal, and the stock's red, but, still has that here. And so, what's the trade when we have this? Well, reversal candles out in the market, they're a dime a dozen. We see them all the time. Right, you don't have to go back very far in the market to look at, and you can say, oh, hey, you know what? We had a really nice reversal candle right here. I mean, new low, snapped on down, rallied on back, next day gap up. All right, bulls are ready to get splattered. We have a nice reversal candle right here, right? They're all over the place. I know it's very easy to look at when the reversals happen and go, oh, well, look at that candle, right? Or, the reversal happened back here. Look at that island reversal. That's really easy to look at in hindsight and see. But what's difficult to fathom is, here's Bank of America right back here in December, 2 really big down days, and then has this day where it opens lower, sells off, gets bought back up the rest of the day. That's a pretty heavy bullish reversal, right? The bulls are going to take over and get splattered again, right? When we look out in the market, there are a lot of these Bank of America candles that are out there. For me, when it comes to candlesticks, right? When it comes to using any kind of candlesticks, there's two things with it. Number one, does it put the odds in your favor? And number two, does it put the risk reward in your favor, right? This type of candle that we see here today on something like a Bank of America, is it putting the odds in your favor? Well, not really, right? If you go look at candlesticks odds, when we see something like this, it's about 55% to the bulls. That's not a great number, right? That's just not a great number there. What about risk reward? Well, if it hits these lows, do you pop on out? If it breaks these lows, is that where you jump on out? Okay. But a lot of times what will happen on these is they'll break it and snap right on back. We see that happen all the time. Or they break the lows on a huge gap and just leave you in a position where you simply can't get out. And so for me, it's not one to load up big. It's not one to say, hey, you know what, I'm going to go and, mortgage the house and everything else and load up big. To me, it's worth a weekly flyer or something like that, that you put what you're willing to lose into it. And if you're right and the snapback is sizable, it's going to make a heck of a lot of money there, right? You don't need a huge position there for it. Or to do some sort of debit spread where, hey, if it pulls on back a little, you can take the one leg off, or put something of that nature into play. But if I'm going to go trade a candle pattern, especially when I'm looking at a reversal pattern like a lot of these are here today, the first thing I need to see volume. I need to see that the market cared. I need to see that, hey, there was a really big reversal in sentiments that took place here, right? And when we go out and look at most stocks, and, Bank of America here, what's the volume? Well, today's volumes are going to be bigger than yesterday, but we're not talking about a big, huge volume day, right? We're not even talking about some of the volumes we saw here in August, right? We're just not talking about all that much volume. And when we go look at something like an Intel, right, we're just not talking about much volume. Today's volume is going to be lower than yesterday's. We go look at, IBM. Look at the volume. Pretty muted. Now, the low volume doesn't mean it can't be a reversal candle. But what happens when the volume is low, the chance of, that reversal candle failing is increased. It is absolutely increased. And so, something where you kind of have to understand, hey, those odds are a little bit switched. But we do have volume somewhere. And if I come back to this S&P futures chart and we pull up the volumes, take a look at the volume here on that 1 hour of the data. The volume for S&P futures on that data, the snap down and the snap back, was greater than any 1 hour volume candle in the last month. It was a monster volume period, and it wasn't just all on the 1 minute, right? It wasn't just all on that down. If we zoom into the minute chart and we look at this hour, right, this 8 o'clock, my time to 9 o'clock hour, we're talking about some really good volumes, right? On the downside, we saw 37K on the downside on the news. Fantastic, whatever. Next volume candle, 22 down. So, we're seeing stops taken out. We're seeing the flush action, huge volume to push it on lower. So we're seeing that sell action really come in aggressively. And then look at the buy action. Look at the volumes. I mean, 220K candles on the upside there. And even the low candles, they're well over 5,000 a minute. That's some really strong volume. Now, we just looked at the big volume in this 1 hour, but even if you go into the next 15 minutes, look at all the upside volume that came in. I mean, this is some massive volume here on the S&P futures chart. And so while a lot of stocks, individual stocks, are not showing massive volume reversals, there was a massive volume reversal here on the S&P futures chart. And so, you kind of look and you go, okay, how do you want to play that, right? How do you want to play that? It's not like you can go out and say, well, let me go buy the market and I'll use today's lows as a stopping point. That doesn't make a whole lot of sense. The downside, the lows are quite a ways away. It's just not a very good risk reward type of a play there. But it is something where these reversals are pretty massive. I can't argue against, playing them a little bit. and going after them. I haven't decided how I'm going to do it here just yet. I've just taken a look at a lot of the pricing. The pricing is better right now than it has been, but it's not. It's still a little bit pricey out there for a lot of things. The option implied volatility is pretty high, for a lot of things. And let's face it, if the market dances around tomorrow in a 15-point range, option values on a lot of at the money strikes, they are going to drop, and they're going to drop pretty big if the implied volatility gets sucked out of them. So there's a hefty option risk here today on these reversal candles, but that's that. We have the volume when it comes to the to the S&P futures. But with most individual stocks, we really don't have, that type of monster volume associated with the reversal. So that makes me look at, more index type plays, something like an IWM coming down into what has been a little bit of support here. I'll go price some of those out here this afternoon with some of the candle setups that are there, and see if, it's worth taking a flyer on. But, please be wary, understand, all you have to look back is this last December, nice reversal candle, right, only to further on down. Did we reverse on any kind of great, grand, wonderful news? No, we didn't, right? I think the best bullish argument that can be made about today's reversal is what? It's that, hey, it happened on bad news, right? So do we have a bad news bottom type of element, going on there? If it is the bottom, right? If ultimately it is the bottom, you come and look at other bottoms. A lot of times there are better buy points, after the quick snapback, right? But the heroes want the bottoms. The hero trade is the bottom, and that psychologically that always feels good. So I can't argue with going after it a little bit here, but the risk factors are great, and I don't think it's one where we look at this reversal and go, oh well, the bulls have all the odds right here, right? In fact, if we come and look at something like the bullish percent index, and let's keep in mind the market's green today, right? The market's up 20 points. Somewhere around there, 19 points. Bullish percent index is down 6%. We are seeing continued erosion in the bullish percent index, even though the market's green. We have not seen that very often. We have seen the bullish percent index go up on days where the market's down. We have not seen the bullish percent index go down on days where the market's up. And, that to me is a warning sign. That's something kind of saying, hey, you know what, be a little bit cautious here. But we do have the jobs report tomorrow. And, that's probably going to drive, some activity. It is very common to see reversals on the jobs report. I would not be surprised to see a better than expected jobs report, see a big gap up in the market that gets sold off aggressively, to end the week, where some of those sellers from Tuesday and Wednesday, step back in on that gap up. So just be a little bit wary with it. Yep, I can't argue with playing it. There are definitely some nice, juicy ones at some really interesting levels, right? And I don't want to be the one saying, hey, don't go play them. Just understand the risk factor there, and that, hey, put what you're willing to lose on them, and you're dealing with high implied volatilities, and you're dealing with odds that are not necessarily fantastic, right? That's just kind of what those candles mean, and what those candles really are out there today. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.